Okay. Well, guys, just let me know if you can hear me clear, and we'll get into it. There we go. Making a bit of a push high now. All right, who have we got in? It's probably a bit quieter day today. Oh, there we go. So I'm just watching the SPY now. All right, let's just get into it, see how we go. Just refresh that. All right, welcome to Trade Setup and live stream for the 3rd of Feb. So obviously you saw what happened over the weekend. Not over the weekend, but on Friday night, the US got smacked around a bit, and it's obviously all the talk over the weekend. So it's given the market the weekend to dwell on it all and just read all the headlines on the coronavirus, and really get a bit nervous on the open. So yeah, it caused a bit of carnage on the open, like you would have, and you should have expected, with all the markets sort of pointing that one way, heading south. So yeah, it's caused a few issues on the open, but it hasn't got worse. I mean, it was open down around 120 points. Hard to get worse from that, but it can always do that. But the market seems to be biding their time at the moment just to see what China does. So we'll go through all that and just have a quick look at different things. And then we'll just get into some trades at the end and see what you want to take a look at. Anyway, for anyone that's new, welcome to Trade Setup. Just look to us at the top. You can join us on Twitter at trade_setup. If you search that, you'll come up with our handle. It'll be this icon. You'll see the yellow and blue saying Trade Setup. So it'll be pretty obvious, hopefully. Facebook, the top right, and bottom right, subscribe to us at YouTube. So sorry I didn't come on last week. Obviously, I probably shouldn't give you a heads up, but it was a public holiday. But most people would have understood that it wasn't on. But today, we'll just be continuing along on the Mondays at 12:30. And a good time just to talk and take stock today, considering what's going on, and just to see. I mean, the topic that I put up was it a fear-driven market. Is it a fear-driven market yet? I don't believe so just yet. And the markets are all heading high. It's going to take a bit to shuffle them. And Trump has been out on Twitter. He's been pretty active trying to support the market and just remind everyone. And he does that time and time again when the market's coming under pressure. Doesn't matter what hour of the day, he'll be on Twitter and just trying to bring out the support for it. So he's been on there saying they're doing well, nothing wrong. It's just a bit of a hiccup in a way. Don't take it too seriously. The fact that the Dow's down 600 on Friday night. Yeah, he's keen to get that market back up and hold the highs into the elections. And I feel he's done a good job so far. I don't see why it wouldn't continue on, and then potentially, see what happens. It's the fear is what's driving the markets, and it is, when we're up. Let's just get rid of that. When we're up at all-time highs, especially in the US, it's when you get that sort of fear. Before this really kicked into coronavirus, and there was so many times everyone thought we're going to sell off, but it just kept ticking away. It's because it wasn't a fear-driven market. And people are not concerned that this thing's going to get out of hand. But now they've got something to worry about with the coronavirus and spreading outside of China. They're really trying to contain it, and we're never going to know how bad it is over there. Because obviously the China want to contain it from the media as well as much as they can, and talk it down. And that's what's concerning people, I think, is that that could be the case. It could be a lot worse than what we expect, and it's going to get exponentially worse once it starts spreading. Da da da. The same. People go through the same process time when it's a fear-driven market. It's just whether or not it is at the moment. And then this is the SPY. You expected the SPY when it closed. I think it was somewhere up here. When it closed at 4 p.m., we're trading 69.50 thereabouts, and we got smashed on Friday night. So you expected the market to open down quite weak, down about 120 points or so as it was, but we haven't really, from the open, we bounced, and we're starting to find some support. Starting to find some support. It's because over the weekend, China came out and said they're going to support the market, put in some liquidity, excess liquidity into the market, try to support it. I mean, they've said that before, and they've banned shorting and all that. So it doesn't do a thing. If it's a fear-driven market, it does not do a thing. And that's what people are concerned about, that if it starts to get out of hand, they can't do a thing to stop it. The people will smash it, smash the market, and they're sort of just going to stand in the way of a train. But if they can come out and talk it up a bit, and the markets are going to see you're sort of in that wait and see mode, whereas the ASX is down at 93 at the moment. We just bounced, say, 20 points, which is great because I was going long the SPY, got stopped out, and just went to go long again, but had to start this. Now it's bounced, caught on the wrong side again. But anyway, so let's just see. I think there is potential. So, going back to the SPY, I think, just to explain what I did do, this is what I was looking at. This market was grinding down, and we had a bit of a pop, and we started to hold. I went long in here, and of course got stopped out when it took out that. No, I was long right here, and the reason for that, I don't know why that doesn't work very well. But anyway, I was long. Where are we? Long on this, basically on that candle. Once we broke that red, I thought this was going to be high low. We're going to start to rock up, and then we just gave it up and continued it down. So pretty much had to change the analysis, waiting for a deeper correction. And it's probably, in all honesty, in hindsight, which is always easy, it's probably the smartest thing to do, because the market it's a strong move down. So you probably expect it to be a deeper correction on that first wave down, and then a pop up. And that's what we seem to be getting now. Whether or not we take out these highs, we put in previously at 68, 65, but there is a lot of shorts built up. There's a stack of shorts built up that could get squeezed out of this market. And there could be a lot of bargain hunting onto the ASX. If things are not going to get worse, people are going to change their mind from the open, potentially, the world's caving in, to, okay, we should go bargain hunting now. We're starting to get supported. The market's doing okay. I think it's early days just yet. And if it does bounce quite sharply, I think that'll be short and sweet. There's still going to be that fear. As soon as it gets to a certain point, the fear start kicking in again, whether or not, and that's just the nature of human beings, I think. So there's a lot to be said about psychology in the market. I know people, you spend most of your time studying, markets, entries, exits, what it's doing, your fundamentals, all those sorts of stuff. But psychology sometimes, when what we're looking at here is a squeeze, and the fact that it did get a bit deeper, that's just unfortunate. I got stopped out of that first long, which would have been up about 10 at the moment, I think, thereabouts. But that's just unfortunate. It's the nature of the beast. But obviously the theory is that the market's headed south. There's going to be buyers starting to dive in off this support level. Whether or not they're going to be strong enough, and you can add to that a few short covering, and whether or not it's going to be strong enough to really start kicking on and trend back up again and start to retest back up to these highs at 69.25, or even, maybe a bit lower. But is that going to be enough to get this market a bit of a move on to the upside? We don't know. But that's the theory, and that's more psychology. It's not really going to be a technical indicator, but you've always got to see think about what is the major, how are people aligned into the market? If they've had the weekend to dwell on it, and people are going to be sitting there open on Monday morning, go, that's it, I've decided Sunday night, that's it, I'm closing out, I've taken enough, I'm done, I'm selling. Or they're sitting there going, there's going to be those other people that will sit there and think, no, look, I think I'll give it some time. But they've already made the decision, so the bulk of the people are going to be lined up a certain direction on the open, are going to either close out or wait and see to see what happens, whether they dive in and start buying, or they just hold some long positions for a bit longer, try to weather the storm. But really that mindset is that the bulk of the market will know what they're coming in to do. It's not a sudden thing. We've had the whole weekend to dwell on it. So it's not a sudden reaction to, a sudden push down and go, oh, the world's caving in, let's just, and that can where things can get really escalate um, and really push lower. Or, on the flip side, if this thing starts running higher, people are going to be chasing it up because they think it's all over again and we're going to keep running high into new all-time highs. So yeah, the idea is the psychology. It's the what is the word I'm looking for? Not the bulk psychology, the common psychology, or I wouldn't like to say sheep mentality, but it's the herd we're looking at. We're trying to adjust for what's the herd mentality. And anyone would be thinking, oh, the world's caving in. You can go and read all the news, all the Twitter, any of the news flow that are coming through from all the major outlets. They're all negative. The world's caving in. The world's caving in. So that's what we've got to defend with. But if everyone's positioned one way, you've got to continue to ask yourself, can this keep going down? Can this keep going down? So if you're trading the market, there could be opportunity on the upside. Or there may be that you just you start to give it a bit more room on the outside if your positions are down, or if you're taking a bit more heat, rather than just stop it out, tighten the stop right in the open, get stopped out with the herd, and then figure out what's going on. There's something to be said about psychology and just trying to understand. And basically, the market is about a herd mentality and what's happening there. And we're trying to position ourselves into the action. Like the reason why this SPY was okay, there could be a massive short squeeze on the cards. We don't know, but I'm betting that it's going to be a hard sell when you gap down from that. Trade down in the European session and get smashed in the US session, and everyone's had the weekend to dwell on it. You can guarantee if you're trying to go short in that market, it was going to be a tough gig. There was points to be made, but for me, the herd mentality, they're all facing down, they're all negative. The bears are out, they've got their suits on, and everyone's going to be sort of positioned long or just staying out, getting a bit nervous if there's a movement down, and that's what the market does. It popped up, squeeze out a few, head south. There'll be some shorts starting to line up again, squeezing out some of these long positions, going, okay, that's it. But the way it was grinding down, for me, wasn't conducive that we're going to run. We're going to get out of hand on the downside, and everyone's just sort of wait and see what China did on the open. So the herd mentality was set down. There's opportunity on upside if they all start realizing they've got the wrong side, or if this is mainly on the SPY, but if people are selling into the SPY, any sort of pop up, they're selling into it. They're getting confident the market's heading south. Asia was chopping around on the open, and then bang, they're all squeezed out again because the fuel is pointing down. The fuel is in the sell side. So if they've got to get out, they can chase it back up again. So that's the idea behind a lot of these markets, trying to get that mentality of what's going on, where's the majority of people positioned, especially when you're intraday trading or you are trading just trading in general, not your fundamental analysis, but you're trading your technicals. You're looking to see where everyone's lined up and how you can make some opportunity out of that. And it's the same, I guess, when you're just trying to find a good example. APT, for example. APT was a good one we had a while ago. Let's just go to here. There we are. So the market, I think there was some news coming out. I don't know what exactly it was, but the market got knocked down there, and there is reason to believe that not making any profit after pay. They're massively, they're doing really, really well. If you're a bull on this, you'd be arguing that point, but there is that other side of the fence, the talking up that they're not doing well, they're losing, they've got all these issues, for something so big, and everyone's loaded one way. There's going to be a short. There's going to be some shorts loading up on it, a bit of a long squeeze, blah blah blah. That's fine when you're down here. I don't think that story is going to work. But when you start getting extended, and that story starts kicking in, there's always going to be people who are going to take the profit, and there's going to be some buyers that are sitting there going too high to get in. So it starts turning from a buy mentality to a sell mentality of the overall market, and it's just how that plays out. Of course, the sellers come in, and then the buyers started stepping in again. So you get to a point where we were looking at in here. There's still sellers that would be a bit nervous if you've held this stock for quite a while. You've held it all the way up here, and you're seeing these highs, and you see this massive sell-off, and then you get this lower high coming. You're going to start edging into the market, edging out and starting to lock away some gains, or thinking serious about it. But then you've just got to watch, I guess, what is happening. Is it getting soaked up? Any of that selling pressure getting soaked up? And it was starting to get it soaked up here, and you can start to see it rise again. So you can see the highs here, high low, a lower high, and then you get another high low come into play, and it starts to see any of those sellers start to get in, whether it be anyone that's looking to close out or some fresh short sellers. it would have been starting to stack up here. What about November last year? Stacking, believing the story that it's going to head south, and they're going to take the opportunity of a lot of people having a flow out of the market, booking profits, and there's going to be a big smashing in APT. Once they start to realise they're wrong, they have to close out, and anyone that could be on the sidelines, that could be looking to get into APT for whatever reason, they're going to start to assess it. So you start getting that swing from the sell mentality, that buying mentality start to flow in. And this is not indicator based. It's just purely, if you take off all these indicators, you just got price action. What's happening is the bulk, and you can see the volume start to pick up. There's a little rally in volume there on the downside. It got soaked up here. Then all of a sudden that spike in volume was supported on a move up. And I think that's probably about where we got in 31.50, right on that candle there. So that's not our volume, by the way. There's no way we're dealing with $32 million of traders. But you can start to see when that started to kick off. I think the realization that anyone that's been shorting it here, potentially here, is going to have to close out. So there's going to be no more shorts coming on. There's going to be short squeeze, and any longs have been sitting on the sidelines ready to go, and that could be their opportunity to dive in. So it's that herd mentality we're trying to take note of, and we're trying to assess it through price action, not looking at indicators, not reading news. But there's one thing reading news, but always remember, news is there to sell their product. Like anyone, if they're pumping out negative news, fear-driven is going to get people reading it, looking at it, and selling. And that's how you sell papers, that's how you sell subscriptions, all that sort of stuff. But the market can't lie. This price action cannot lie. If you're in, you've made a decision, you bought or sold it. It's as simple as that. Fundamentals, we all know that fundamentals are good. You can read as much as you want, but edge of the graph missing. Thanks, John. I'm a bit slow today. There we go. That should change in a second. But what I was saying was fundamentals. Even you can hide stuff. I don't know much about accounting, but fundamentals can be hidden. Different bits and pieces can be hidden. It sounds bad, and I know that sounds a bit of a conspiracy theorist, but it does happen. There's always someone that knows news before someone else. It's illegal, but it does. People get the inside run. You see a market spike, and then all of a sudden they come out with a capital raising, especially on the smaller ones, and you go, what's going on there? Where did that volume come from? It's getting ramped up. Capital raising's down, 10% below that average price, and then the market just returns straight back down again. Or the market starts heading higher, and spikes higher. Out of the blue, you get a rise in volume, a bit of a spike, and then good news comes out. So there's all these sorts of things with fundamentals, and you're not going to know that if you're just reading everything that's online. You're reading what you get given with your fundamentals. So you only know what's been given to you. You don't know what you don't know. But in the chart, if someone knows something we don't and they've made a decision, we'll see it in the chart. So you can't hide from price action psychology and all that sort of stuff. So that's why, that's ideally why I love technicals. But in the flip side, I will always support my view with reading through the news headlines and what's going on with the stock. If something, I think it should be negative and I'm seeing it's looking positive, what are people latching onto? What sort of positive headline are they latching onto? There's got to be something there. And you can find it with the fundamentals, but if you can't, either you be cautious with your entry or you just commit to what you're seeing. So yeah, that's, I guess, just a bit of an explanation of what I'm seeing at the moment. Let's just run through what could be going on. So the SPY is still, look, this could be a bit of a short squeeze. Anyone can see. I don't think that'll, look, it's probably just going to run straight up through that high. Anyone can see that high there. The SPY looks like it's potentially ready to go, which is basically this previous day's high at about 10:30 today. That could squeeze out a lot of people. Any of these bears that started selling in here, don't forget, if they haven't got out, which is always going to be people that won't get out, they're holding, they've got the stops above there, they could be set to get triggered any minute now. And that's all, that's just psychology of the game. Just want to see if it actually triggers. So, all right, let's just go through the overall markets. Just get the trading view. So this is gold. Is it Aussie gold? Yep, gold in terms of Aussie. It's a 30-minute chart. It did have a bit of a run up. It's just been smacked down on the open. I think, again, that's not what you would expect if you've been reading the news. We expect after reading the news over the weekend and everything that's going on, you could rightly say you'd expect the world to be caving in. Why is gold saving off if it's a safe haven? And if the world's caving in, why is it coming down? Um, and physical gold's coming down as well. Why is that? It's pure and simple. Psychology, people don't care. You get to a certain point, if you got gain sitting on the table, you could not care less. If you're getting that sort of, that's what do we call it, sweaty palm feeling. Sweaty palm when, one, you're in trouble, and two, you've got a lot of people. I mean, I do. If I'm sitting on a good gain, I start to forget about the fundamentals or the technicals and things like that. I start to look for any reason to get out. I tighten my risk, but that's just the nature. That was my downfall, and there'd be a lot of people doing the same boat, looking for the same things and looking at that gold sitting there, go, look, I bought it here. The market ran up. We got right through those highs, and then you start to see a couple of red candles come in. It's not doing like you thought it would do. Run up, you just dive in. You don't care if everyone's talking about the safe haven gold's going to 2,000, all that sort of stuff, because they wouldn't have a clue, to be honest. No one knows. You got to remember, even any brilliant fund manager, all these sorts of, they don't know what's going on. They don't know what's going to happen because it's a consensus view. All we can do is read what we're seeing. So that's what we're saying about the psychology of it. When you're sitting on those gains, you're going to be staring at it thinking, oh, look, I should just buy it. What if something happens? What if China do support the market? What if they do this? What if they do that? What if the US it pops back like it has many times before? Let's just close it out because gold's going to sell off, and so on. Crude's still under pressure, but we're at a key area. If I just go back to the daily, there's this key zone at 51, say 50. Get rid of that. All right. Well, that's probably what I was drawing on for the stream. So we're at a key area where you could expect one, and this is what we go back down to psychology. If you think, if you had to add it up, the coronavirus is going to get worse, exponentially worse, because the news is telling me that everyone's nervous, Crude has been going down on negative news. We get negative news. Crude is going down. Yep, it's got down, but it gets to a certain point where you might expect some reaction from buyers. Anyway, sorry, sellers. Anyone that sold it up here is going to be looking at that level and find it's 1, 2, 3, 4, 5. This is the fifth time it's going down. If you start getting a green candle come in, you've got to think twice about whether you're going to cover or take some risk off the table. Who cares what the news is coming out at? That's what trading is all about. It's going in front of the herd and selling to the herd or buying back from the herd mentality. And that's the aim of trading. So I'm just looking at this level, whether or not it's going to provide some support at 51.35. Don't know yet. It's too early. And we've got the daily chart. This thing can just keep going straight through and go straight down to that bid zone at 42.50. We don't know. We're not going to quite try to question it. All we can see, if it starts building a higher low, come into play, we start popping up and we start doing something like this, then we'll probably start to think, oh, look, we're going to get a bit of a short squeeze on oil. It doesn't matter what news is coming out, we're going to get a short squeeze because it's going to be people that have sold it. The first ones that have been selling it into that support zone are going to be the first ones to be chasing their tail out, and so on. And as you work your way backwards, the pressure goes up. As the market starts to push up, the pressure on sellers is, you go to that next level up, the pressure is applied to, the next level up, the pressure is applied to, and so on. Until it runs out of steam, you get sort of stretched in that rally up, and then you're going to be looking to see what happens next. But again, it's just that psychology. But crude has been taking a beating because of China being a big source of demand. What are they going to do? How's it going to affect their economy? Are they going to cut back on their demand, on soaking up some of that supply, or not? What's OPEC going to do with oil? OPEC going to start cutting production to try to support this level? There's a lot of things here for me. I'd be looking for a buying opportunity just to squeeze out some of these shorts to see what happens. Not particularly into the stock, but more into the actual futures market, or a CFD on oil, just to see if we can get a bit of a bounce off that level, because it's extended quite hard into that zone. And sooner or later that momentum's going to run out. You might get a bit of a spike up and then just assess it as you go. We'll wait and see there. Copper, it's been a proxy, a smashing proxy for coronavirus as well. We're starting to do all right on on the end of that trade one deal. Was it phase one? Sorry, trade deal was coming into focus, and that was doing well. And then boom, as soon as the virus headlines started to come out and it's starting to look bad, that just got sold off because we know that it's again same with crude, big supply of demand in China. So people will be just assessing this to go see, look, that's another bid zone that's holding up. What's going to happen there? And that's if you're looking to go long, you'll want to see what sort of reaction you get off that zone. If you're short, same scenario. You don't care about what news is coming out. It's come down hard in it. It's really expanded hard into that zone. What kind of reaction you get off there? Because you're going to run out. Sooner or later, you run out of sellers, and sooner or later, there's going to be more buyers starting to stack up. You don't know if they do, or you don't know if they will. That's just something we have to watch. But yeah, it's the same sort of thing. Copper and crude, they're just a proxy for this coronavirus. Corona. There we go. What else we got? So that's the currencies. The Aussie is each time there's talk of it getting out of hand, you're getting sold off because obviously that massive link to China. Basically, it's a Chinese currency, the Aussie. So it links into that. We've got to, I mean, any Aussie traders, any people buying, that's why the ASX is under pressure still. Is that we've just got to assess what sort of damage it's going to cause to the economy. I mean, I wouldn't have a clue, to be honest. And there's always still talk with the common cold or the common flu causes more deaths a year, much more deaths a year than the virus. But it's the unknown we don't know about. We're sort of used to, it sounds bad, but that many deaths a year, according to the statistics, because there's a lot of data already over many, many years. But we don't know what's going on here. We don't know if it's going to get out of hand. And we all watch the movies. We've all seen these virus fears and how things just blow out of proportion. And human nature, we're going to get fearful and we're going to blow it out of proportion before we start thinking rationally. And it's just when do we start thinking rationally about the markets? But either way, that's the Aussie looks, it's in a downtrend. It's really spiked hard. So again, we're just going to be looking to see what happens down at these levels. What are we now? 68, 66.80. Are we going to find some support there? We're just going to keep getting knocked down. It's extended there. So the way I'll be viewing this, again, the same as you've got crude and copper. Are we extended into that zone? Are we going to get some buyers start to stack up? Are we going to get a short squeeze? What's going to happen? So if you're looking for a new position, you really want to be looking off those higher lows, off working your entries off a shoulder meaning the higher low. Something less. So the market's powered down. We want to be looking for an entry, stock standard to see, and you can see that I always like to draw something that the move down is not as severe, like the, what do you call that, gradient of that move down. It just as a bit of an indication where sellers are running out of puff and buyers are starting to soak them up. If that's the case, then that's what you want to be working your entries off. Basically your shoulder in here. So it goes the same, especially if you're going against the trend. If you're going with the trend, pull back to the MAs, see if the MAs hold. You can, again, depending on what time frame, you work your shoulder just in reverse for a sell, or the same sort of thing for a buy. You're looking for you just those shoulder entries, because that's, to me, if the market's heading south, that's an indication that buyers are starting to step up, and you're just looking for your break higher entry. You know where your risk is, and away you go. See what happens from there. So that's the Aussie. Euro, US dollar you got smashed a bit on Friday night. So that reaction, probably go down to an hourly chart, from the euro was all dollar based, and they've been in lockstep. The euro's been going lockstep with the US dollar. US dollar goes up, euro down, and vice versa. And the same sort of with the pound, except the pound, we nabbed this on a it wasn't as an alert, but we put this out saying, okay, it breaks through here. I expect it to, push up to 31.75, and just watch to see what happens there. Did push up nice and early, but got a bit of a nudge higher once the US dollar started falling apart. Anytime the US dollar got strength, the pound was holding up. So got Brexit they're looking at, they're eyeing up to see what happens here. Any good news is going to give that support into the pound, but we'll have to see what happens. Any negative news on the dollar, the US dollar, any sort of selling into that, it's going to find the pound's going to kick on fairly hard. So there could be a room to move on the upside if we get through this 31.75, but we'll see. All right, ASX, let's just look at, where have I got it? Here we go. So this is what we were looking at, I think it was Friday. Might have been what I sent out Friday, I'm guessing. Um, but now we've come into that zone where, I mean, we go to, just go to a daily, and we just take a step back. So we're looking at the bigger picture. That is still a bullish trend. I mean, daily's up, weekly's up. It hasn't broken any anchor. So when we talk about fear, and the market could use fear a lot to reset itself and start a new trend up, because we know that they talk it up, the market gets smacked, there's buyers lined up, queued up, ready to go, and continue that move higher. And any good news, people will be chasing their tail. So when the fact that we've got this, the market's heading higher, and we've come into that, the weekly's heading higher. It could get a bit extended, of course, but the market can stay extended for as long as it wants. It's just that if you're looking to buy and it spikes higher and the market's extended, you wouldn't want to be buying off the weekly, and the same on the daily. But if you get a bit of a pullback, it starts to hold, and you got the weeklies extended, the daily comes back into sort of that oversold territory, then yeah, that could all line up pretty much like it is at the moment, if you can see. So this is a bit different, the action here, and you can see compared to what we saw here, big smashing down, we hadn't really got ahead of ourselves back then. And the same here, the market sort of popped up, that action there, when you get a couple of red days, green, red, green, red, that to me, I'd be bearish on that. And then it sold down, and then we started to get a bit bullish, and the market started to lift, got smacked down here. I think that was a phase, that was a trade deal news coming through there. And then it started to lift and get a bit of a run on. So that was pretty much squeezing out anyone that's still negative, anyone that's still selling into the market, it squeezed them out, and we really took off back there. So to me, if we just take a bit of a snapshot, you can see what I'm talking about. I'm just going to get my trusty. This is what I don't mind. That's that. I'll just do a different color. So I don't mind this kind of thing. The market, it's got to flush out, and we've come into a zone where potentially we might find some support off 6,900. I mean, that's just pure and simply looking at the technicals. Doesn't mean go and buying just here, because it's going to be hard buying on a day like today. But what it does mean is that there could be a good zone just in here where buyers are going to start making a bit of a stand, around, give or take, around 69, just because the technicals are starting to line up. It's bouncing off that 50 MA. We've had a good run up. We did expect some heat to come out of that market sooner or later. And is this enough heat to come out of the market? One bit of a pullback, we're trying to go sideways here, and then it's secondary pullback, that secondary leg lower, really to put the squeeze on. And you've got your stochastic getting to sort of that oversold zone, and it's still matching up as a higher low, potentially. Higher lows are still holding. So to me, that market, even though the news is negative, even though it's putting pressure on, the market is still showing a different story. Showing that there is potential that it can hold up here. We just have to wait and see what happens. I mean, there's no reason to just go in and buy here. Ideally, what I'd like to see is we've got, let's go, what am I doing here? So we've got that one, two moves down, and then you're just basically looking to see if we can start finding some support. Again, it comes down to that setup. Come on, that setup, and then from here we starting to get buyers soaking up between say 69.25 and 75, soaking up. The bears are still starting to make a bit of a run, but what's happened? Anyone that wants to sell, you get those initial fast sellers that are really just, that's it, I'm out. And then you get that secondary wave lower, as there's a whole, it uses up a lot more fuel for a move down. So with that 2 waves down, it's used up quite a bit of fuel already. So you've got those residual sellers, the latecomers to the party that are selling now. But then you can see that buyers are starting to step up, and that's what you're looking for. If we can start to get that scenario play out, then we could be confident that something like this is going to play out. It starts to break, something like this, it starts to break. We're getting high lows starting to play out, and then looking for a rally on the upside again. and looking to potentially target new highs, new all-time highs, as Trump starts to support the market, as we got, the market goes back to, it reverts back to the, well, I guess the mentality it has had the last few months, buy the pullbacks, buy the dips, and rally hard. So we'll wait and see how it goes tonight. Not saying that that's exactly what's going to play out, but there is potential this the ASX 200 could hold up here as we get a bit of a squeeze on the US. But let's just go over to the US just to quickly look at. So let's go back into a daily. That's the ASX there. Let's just go over to the big S&P. Again, big S&P, it's got this little level, minor level here at 3210, it potentially bounce off here. It's a lot more extended than we were. The US, in pretty much all markets, that's the NASDAQ, the Dow, they're all extended. The Dow's had a bigger move down, but it's still got this channel that it's, sticking to. And the move down could continue down to 320, which is the anchor to this trend up. It could down and retest it, start to set, and by that time you'd expect that if that's the case, it's going to move down here. We could be looking for, we just have to wait and see if we can get that high-low play out. See if we start getting a bid, so buyers start to step into that zone, and see if they can hold it. Yeah, 50 on. I'm guessing we're looking at the ASX still, Brian. Just let me know, mate. I'm not much of a fib man, but it's more about waves and high lows and just what's playing out. So yeah, that's the Dow. I mean, it's still holding an uptrend. That uptrend's not broken. That 600-point move hasn't done really anything. Hasn't dented that uptrend really. It's just going to squeeze out, and it's just working on this leg here. So that's the most recent leg up. So it's just squeezing out a few of these buyers through that leg. But there's a major leg. That's the major leg up. So that leg up there hasn't corrected just yet. We've had a bit of a correction. Actually, now that key leg hasn't corrected yet. And that means this leg's got to break down, and then we've got some serious problems if that does correct. But all in all, that's the key leg up. We're starting to, obviously, you're getting a bit stretched when you're up at nearly, what was it, 30,000? What's that, 29,500 on the Dow. We've got a bit stretched, and it's just a good excuse for to lock away some, the ASX, okay. Good excuse just to lock away some profits in the US, and that's what we're coming. If you run out of buyers because of the news, it's starting to play out, starting to flow through. There's going to be people that are stacked up on some good, handy profits. They're going to want to lock them away. Yeah, so 50% fib, I'm guessing that leg up. I've got to find my fib tool. Is that it? No. Gann Fibonacci. Yeah, 50 fib. So it's just bouncing off that 50 fib. So that's what Brian was just talking about then, I'm guessing. Yeah, so we'll see if they can hold up. I mean, that matches, that 50 fib matches roughly to, this level here around 68, 62. We expect basically buyers to start holding up and see if they can fight back. Anyway, all right, put in some shares there, guys. Well, look, it's just, I mean, in reality, there's not a lot to look at just yet. We bounced hard, haven't we? So there we go. This is that level we just talked about. Put in the squeeze, it just broke up. It broke another, was it 62 up to 72, another 10 points higher. So kills me when that happens. I'm early a lot. So I just missed out on that secondary trade long, which would have been nice. Would have been handy if it got a, actually that would have been a tough gig, I guess, before it breaks. But so 68.40, whether you stop below that candle, another 30 pips. So that would have been good. Right, put in some shares if you want to take a look at them, guys. If there's anything you're concerned about, you want to just have a bit of a chat about any of those ASX or some currencies we have a quick look at. At the moment, you've got CBA's bounced back quite nicely. It's only down 0.5%. APT is still hanging in there quite nicely, so the bulls are still out there. It's buy the rumor, sell the fact. TPM, which is one we got in at 6,730. Been watching it for a long, long time. That's a bit of a correction today, which is a bit of a bummer. But I mean, in all honesty, you can expect it on the daily chart. It goes near vertical for a couple of days. You're going to expect some sort of heat to come out of that move, just that minor move. See if it chops around 720, can hold up between 720 and 30 and start a new trend higher. So I think the weekly is looking really good for an extension back. I'm hoping for an extension up to that $9 zone, at least these previous highs. Webjet, what's the code on that? WEG, isn't it? Or the WEB. All right, let's look at Webjet. And if you got the code for the second one, is it no rada? Just put that up. This is Webjet. The daily looks choppy. It's sorry, that's the weekly. Daily I wouldn't touch just yet, and the weekly I wouldn't be touching just yet either. Just looking at that, and you can see. Just go back a bit. Whoop. No, just go. Where's my mouse gone? Oh, awesome. Just give me 1 second, guys. I think my batteries and my mouse are running out. Just won't take me long. Yep. That was bound to happen today, wasn't it? There we go. Just put 2 little batteries in there. There's endless supply of batteries now. There we go. We're back on board. Well, there we go. So Webjet. What I'm looking at here is, this is a weekly chart. So it was in a good little trend until that spike high. Anytime it spikes really hard over the period of a week, which was back here, it gaps up. That concerns me, but you know that you got a gap to close potentially, and the market's done that. See this big spike up, news probably driven, I'm not sure. There's going to be some profit taking, especially if you bought it through here, because that leg up's extended. So let's just break it down to sort of legs that we're looking at. There we go. So that is one good leg up. And then the market's consolidated that. So that's a good sign. That's your secondary leg up. Okay, so we've had another good leg, and this, before that, there's been a few as well. We've had the market go to contraction, expansion, contraction, expansion. So that's all we're ever looking at. So we had it expanded higher. It's consolidated sideways. So if you bought something in here, or even off, this higher low, that's, sort of a prime entry. If you could do that, or buy, on that break up there and just see how it goes. Even buying there, getting a bit late into that trend. I mean, we're looking at hindsight, obviously. But yeah, that's where you wouldn't get in. But looking up here, when you've actually extended quite hard, that's where, we talked about before, we want to be in the unknown. So we don't want to be buying or selling or trading in the unknown, not the known. The unknown is areas like here, looking at here, potentially in here. It's unknown what's going to happen, maybe in here. But when you start getting extended, buying up here is not the best thing. That's more the known. A lot of people take comfort in that, and that's the hardest thing about trading. You want more confirmation. So when you got more confirmation, I look at the gaps a bit, but it's more the extension. I don't always look for a gap close, because gaps don't always close. You can, it can gap up and just kick on strong from there. But I do take note of it. But it's got more to do with the price action that's playing up to that gap. Now, the fact with this, if you go back to the daily, it gapped up quite strong and it's extended that leg up. Yeah, I'd notice that gap and I'd be looking at that going, oh, I don't want to buy that. I'd rather take my bat and ball and go play somewhere else. So yeah, what we're trying to do is we're trying to buy in the unknown and sell in the known, potentially, or looking to lock away some gains in the known. So that goes back to that herd mentality. The herd mentality haven't cottoned onto it just yet. The herd mentality, when it becomes more than known, they've cottoned onto it. It's a strong market. Let's buy that. Let's see what happens. I think this is going to go a lot higher. It's just that same mentality that plays over and over and over again. And we're trying to, take the opportunity when it's hardest to pull the trigger in the unknown, because you don't know what's going to happen. But when you're looking at the price action and what's going on, you're assessing it bit by bit. That's sort of that's the area we want to be in all the time. And then you're trying to look at it, you're trying to assess your setup, you're trying to assess it with volume coming in. The market, every time it goes oversold, what's happening? When it was going oversold here, if you can see, it was getting soaked up. Last time it was sort of down here, same sort of scenario, but soaked up when it was down here. So you can see that any selling pressure, higher level compared to here. So we're just trying to assess it with our indicators. We're trying to assess what price actions do we, not using our indicators to buy off or sell off, but we're trying to assess price action with some indicators and volume thrown in to what the mentality of the herd is going to be. And here, the mentality of the herd is still, no one seems to be closing out. The price was consolidating sideways, sort of above 9, between, was it 9 and 12? Wide range, yes, but it was chopping around the bigger picture. You got one leg up. We're looking for that secondary leg up. So if you're looking to buy in here, in this zone, say above 9, 10, wherever it may be, you're ideally looking for that secondary leg up, and everything that's come previously is suggesting there's going to be that secondary leg up. If you ever see a market, there's a hell of a big difference when the market's pressed up and you start to pull back that way, and this is where it comes to, I think Brian was just saying, the Fibonacci's. A deeper retracement is a sign that there's less strength in that move or less people willing to hold, as opposed to something like this, which starts to consolidate, these sort of higher levels, which it just did here. That's a much better a sign of strength in the market. And this is where we always talk about, this move up, break it into thirds roughly, probably very similar to do with your Fibonacci's, but ideally I'd like to break into thirds. If it stays within the top third of that move up, then that's a strong market. You're looking for that secondary move up. If it pulls back to sort of that middle third, yeah, look, it could still go well, but you want more confirmation off a good higher low. You want to really see those buyers starting to stack up, volume increase off a higher low, and then, yeah, okay, it can be a good trade. If it pulls back to that first third, something like that in here, I'd steer clear. I just think that was a bit of a pump and potentially a pump and dump. Or you just want it to do a lot more work to give you the evidence that, yeah, it's going to go back up again and you're going to get a good little run higher. So that's the way I approach things. And the fact that this stayed in the top third was really a good positive sign that this secondary leg was going to kick on. I've veered off the track a lot, but when you get to here, you can see if we just go, I'll just take a screen snapshot again, step back, now we're assessing this leg up. So once we get to about here, the fact that it comes smashing all the way down, I don't like that. All right, it's nearly traded down to the lows or the original point for the rally, origination point of that rally. The fact that it's come all down there, I don't like that. And that's just what we went back to talking about. It's gone to that first third of that move up, that leg up. It's retraced all the way back to that first third. And the fact that it turned on a dime and went straight back up and then failed for a second time, that's a key double top, which potentially means this is a lower high coming into play. So essentially, if I get a double top, I'm looking for that lower high to come into play and really extend that move down, which means a break of 950 down here and heading south from there. That's ideally what I'd be looking for. I don't know if that's going to play out. I want to see if the bulls can put in a bit of a fight here, but I want a lot more evidence before I'd be diving into this market. And that's based off the weekly. So that's why I'm not really concerned about the daily at this stage. And look at the volume that's come in. A big spike in volume on that down day. Got smashed Friday. And the market actually didn't get smashed itself. It did open up a bit stronger and it sort of drifted lower into the close. We ended up about 8 or 9 points on the ASX, but that's quite a bit of hefty volume coming into selling on Webjet off a lower level. Last time it came up some good volume, well, not so much in here, but the last time it got up to a high, what am I trying to say? It was up at this level. When it was extended up, we're at a lower level. So we're below $15 as opposed to up near 17. Add that to volume. So we're extended here, lower level here, added that to volume. So to me, when you've got all that sort of coming into play, I'm looking to a break of $10 on Webjet at the moment. Doesn't mean I'm going to short it, but I just wouldn't go near it at this stage. Saw value, okay. Yeah, there could be, but for what I'd be looking at on Webjet on the daily, I mean, I'm really risk adverse. I want this level after all this. The market's so that's your leg up. We've had a big retracement. Another double top's come into play. We've come all the way back down again. We're coming in here. So at this stage, we're about here. I want to see that again. I want to be proven that that's going to get soaked up. And again, it just comes down to some high lows. And if you get something like that coming to play, buying the break of the most recent lower high, and away you go. You know where your risk is. And that's the most pitiful drawing job, that we would be looking to buy on that break there with our risk below. So you got tight risk because at that stage, lower high here, lower high, they're fighting against these. Let's just straight. At this stage here, it could just as easily go down as it could go up. But as soon as you've proven that these lower highs are buyers soaking up any selling pressure, then you're just looking to, as soon as it breaks through that most recent lower high, anyone that's been selling in here, maybe shorting it because of that coronavirus, looking for that move through 950 is going to get squeezed out of the market. So it's exactly the same as we were discussing before. So that for me would be an ideal setup if it plays out. But I think it's got to do a lot of work before it plays out. I think this coronavirus is not going to go away too quick. But yeah, I hope that helps there, Brian. It makes sense anyway. But you want the market to prove to you what it's doing. I mean, we said this time and time again. I like to say it a lot, is that you want everyone else to do the heavy lifting. You want everyone else to start supporting the level. And it's still in the unknown because we don't know if it's going to rally higher or not. But here is your first sign that we know there's going to put the squeeze on these recent sellers that have been stacking up through here. Sellers through here, potential sellers come in there looking for that break at 950. And then if they don't get it, they're going to have to bail. And anyone that's been watching it, like yourself, watching for that, potentially heavy selling, just being overcooked, then they start to chase it as well. And they might want more confirmation on that second pullback. They might be looking here. They might, if it pushes all the way up to the highs, they might want to break of the highs, first pullback, or they buy on the break of that highs there with their stop way down here. You don't know how people trade, but that's ideally what I'd be looking for. And again, it's that psychology of the market. There's always people are going to get smashed, chopped around, going down 30% from initial offer. Do you know what the code is there, Brian? Just whack in the code and we'll have a look. Oh, bugger. That short's going to kill me, isn't it? So the SPY's going to kill me. Hate losing, but being right. Look at that grinding up. Bottoms. All right, so if you got the NYR, good. Let's go. Oh God, it's going to forget about the weekly chart. That to me, I mean, it's hard to tell. And the problem, if this is a new, what is it, new IPO, date was that? It's come on the 16th, so they've hell of a time to come on to float. But ideally, what you could be looking at is quite simply, I wouldn't buy it now, pure and simple, because very new. Wouldn't buy it now, pure and simple, because there could be, you don't know how many people have got out. They could be holding that from the float. I don't know what the float was. Say it was 25 cents. Anyone who's bought it on the float at IPO for 25 cents, when it gapped up on the open at 30 cents, they were looking great. Then they got put underwater. Then they've got put back in profit, just at these highs around 26, back in profit, all looking good. Then they get smashed down again. So if they're going to try to ride that storm, you're either going to be a big believer in it, but there's always going to be people that the higher the coronavirus kicks off, or the more that kicks off, and the more the fear kicks off, they're going to just look bail and just take a loss, because there's always people that buy in the IPO looking for that quick gain. They're not going to be believers. They don't care what it does in a year's time. They just want that quick gain on the open, potentially 20 cents. All right. So to even 20 cents, they're still, they're getting underwater now. So that's probably a bit worse. I'd say that the fact that it's heading down to 20 cents now, the IPO price, after being at 30 cents, they're up, 50% when it opened up at 30 cents. Now they're back to break even, and they've had on the open to get out, hasn't. They've come back to break even. Secondary push up, they were up, say, 10%. that about right? 25%, sorry, 25%. I'm just trading around 25, and it's come back to break even for a second time. Add that to the market getting smashed today, down 100 points on the open. Could be fear driven. If I was looking to buy that, enter that. If we're looking for signs that, yeah, to keep it, I know I have no idea the fundamentals, and that's the hardest thing because there's not enough data on the chart to what it could be doing. But basically, you're looking for things like that. You're looking for that to be broken. If it starts to hold this level, essentially you're looking at a double bottom. If it starts to do that, you'll be targeting up towards 25, 26, and even a break up through there. And again, if it can start to pop up, pull back, and the first pullback gets soaked up, great. You'd want to hold on to it. So what do they do? Let's have a quick look. Profile. Drug development company. The company specializes in development of novel small molecule drugs pertaining to the underlying psychological processes involved in cardiovascular, neuro, got hard words to say, degenerative and chronic inflammatory diseases. Yeah, still have no idea what they do. All right. So it'll be interesting to see if you know about that, and it's a really good story. It's worth sort of holding to see what's going on. But yeah, either way, that's, if I was looking to buy in this, I want to see this. I want to see the 20 cent zone hold. So I want to see that it's squeezed out, even if it, if it pops down below that. Say what we've done, come into support, come back up, come back down. I don't mind if it just breaks through support, but if it could pop back above and start to hold support again, that would be nice. That means that it's flushed out the weak hands that have bought the IPO for a quick gain. It's flushed them out, and then it's starting to hold again. So again, other people might be building and adding to a position because they're a big believer. They know something we don't know, whatever it may be. But you want anyone that was wanting to get out, I'd suggest that this secondary move down is going to cause them. If it starts popping up through there, and you do get this double bottom scenario, even with a bit of a washout here, this washout I'm talking about, and it starts to reclaim 20 cents, 21 cents, and holding above 21 cents, then yeah, I'd say it's cleaned out a lot of the weak hands, especially after a bit of a belting on the open today. Put them back on the sidelines, and then if they start to realize they're wrong and it starts to lift and they still love the story, it's fear that drove them to lock in those, a small gain or a small loss at 20 cents, but they still believe in the story. They might be chasing it higher again. Does that make sense? So you just got to constantly churn through your head, I feel, is the psychology of what could be happening. About the story, about the fundamentals on most stocks, and you can see the technicals. The technicals will give you, for anything, if we go back to the APT, see that looks great, TPM, just on that chart there, but we'll see. If we go back to APT, I honestly didn't like that, and we've traded it quite a few times. And I read the news, I look at it, and think, yeah, that's going to get belted sooner or later. They're not turning over a profit. I think they're I don't know I don't follow the fundamentals as much as I should, but reading about them, there is a negative tone to it, but it keeps surprising and it keeps holding high levels. So all I can do is look at it and go, look, don't be stupid. I don't know. It could be something I don't know. There's a lot of people still buying it. I don't know how much. You always got to question how many people on the sidelines willing to continue to jump in, and if we flushed out, have we flushed out enough to continue higher? All these sorts of questions. So at that stage, if it's holding, all these high lows all through, and there's no reason to believe that wouldn't hold another higher low. And everything to me is showing, it's coming off a good zone. You got the selling pressures come in. We held around 29. Last time it come in heavy selling, we got down to 26. Last time sort of heavy selling, we're down at 22. So you can just see that it's every time the seller's coming and trying to knock it over, it's getting soaked up by some buyers. So there's still a lot of buyers willing to dive in, and they may be targeting 40, 50, 60 bucks. You just don't know. So all you're doing is looking for your entry, get on board when it plays out, and looking for the squeeze of the people that got it wrong, that got in the wrong time. And that's, like I said, you can just take everything off that chart mean, I like to look at my volume and I like to look at stochastics and the MAs and things like that, but I feel that if I could take everything off my chart, I could still look at and see the entry standing out pretty nicely and still read into it the psychology of what could be happening in that trade. Does that make sense? So we might have to just finish it up there, guys. I didn't realize I was talking for an hour, so it doesn't take me much to continue on. So I hope that helps. I hope you enjoyed that. But yeah, just try, getting through that practice of what's happening, what's psychology of the move, where could be people be positioned mostly, where could be the herd, where could the herd be positioned, which way, up or down, and if they're positioned down and they're starting to pressure on the upside, they could be chasing the tail to exit. And is there a trade opportunity in that? You're going with the momentum. So yeah, if you can just get in the habit of trying to assess all that, then it's going to help your trading, I think, a hell of a lot. 6 pounds. I'll tell you what I think about it. Lack of a better word, I'm pissed off with the bounce. I was expecting it, and it comes back to that SPY. Now, where it goes to from here, where's my other chart? I'll go down to let's just go to a 30. No, that's not what I wanted. This is your 30-minute chart. There's no reason to believe, we're out of the woods. So what I ideally like to see, and it's just what I was talking about with your higher lows and things like that. You got confirmation through a higher low and a bit of a squeeze and so on. I basically just go through that sort of scenario on different time frames. So what happened? I got it on now. Just go back to that 5-minute chart. We got this pop up here. So this is what I'm basically looking at. You've got the pop up through on the open. That pop up off the lows. And ideally what I was looking for is a high low, which come into play around here. All right, I thought it was going to be here. I thought it was going to be a bit earlier and put the squeeze on the sellers. So as soon as you get the market is breaking down, so you can see if we draw that a bit thicker, this is the move, okay? That's the move down. So at that stage, we hadn't broken it. As soon as we go up, we break the most recent anchor to that downtrend, and that's been the move. So if you just draw it up like that, you can see at this stage, we haven't broken any anchor to this downtrend. As soon as we break that anchor, what's that going to do is lead a lot of people to start thinking, are we finding a bottom? Or if you're shorting it, you're going to think twice about holding your shorts. It just changes the dynamic of that move. And you start to have to question anyone that's looking to buy, looking to enter like myself was. I'm looking for that opportunity to jump in and get on board that squeeze higher. If it doesn't break the anchor and you start to retest and fail, then yeah, the move's not over and there's more downside to come. But it didn't. It broke that anchor. You've got this grind lower. You can see that the gradient of that move down was not the same as previously moves. And it was starting to get soaked up, and you get soaked up at a higher level. Once we get oversold, we're down at say 68.25. Oversold, we got to 68.30. It's only a few points away, but it is a high low. So that sort of rationale, I just go and add to, the same sort of thing on different time frames. So you got this move here. We could be now, but I'd look at this a bit differently. The fact that I'll clear all that out. Delete everything. I'm going to start again, aren't I? Oh, we're done. So the rationale behind this one is you've got a key level here. We've now broken through that anchor. So I'll be looking on the half an hour chart just to see if we can do potentially something. Well, that's not what I wanted. Something like this and extend that move up, because that's all part of one move off the lows. And if we get this secondary high low and we can start doing something like this, great. But I don't know what's going to happen until we get this high low come into play. I start to feel that that's getting a bit overcooked on the upside on the 30-minute chart. We're getting a bit extended. So it needs to pull back. It probably needs to pull back just to clean out a few buys and then start to reset. And if it can reset, there's always the chance, don't forget that, just extend this out. Whoops. There's always the chance that we do this. Say we do come down, and then I'll be looking for that, and say we do that. Okay, then the proverbial could really be hitting the fan, and we start heading south. Does that make sense? So I think it's going to roll over. I want that to extend down, but if it extends down a little bit and starts to grind back up, these grinds you've got to take notice of. Right? If it starts to grind up, okay, that's your bull giving it a good shot, but there's too many sellers in the way. Too many sellers in the way means that bulls are going to give up sooner or later. And if they give up, sellers keep piling in and they keep pressuring it lower, then yeah, we start to attack these lows down at 68.30. But essentially, these are scenarios I'll be looking at. I want it to extend down, deep retracement, and then see if it can hold up. And I'll be looking for that secondary leg up, all part of 1, 2. Okay, 6,900, nice. On the SPY, on the ASX, I'm guessing. Yeah, nice. I mean, just keep an eye on it. So this is on the bigger time frame, on the 30-minute chart. This is what I'll be looking for. Whether it happens today, tonight, tomorrow, the next day, who knows? That's what I'll be looking for. I want to see what happens on the first pullback. If the first pullback gets soaked up at a higher level, then yeah, we could be looking for an extension higher. If we come back in and we start to grind up and really struggle to kick on, like this second scenario, then be careful of longs. So you've probably got some time on your sleeve there, Brian. Anyway, I better call it a day. Thanks for joining me, guys. Any questions, feel free to send us through an email to support@tradesetup.com.au. And then, yeah, we'll be back on next Monday at 12:30. So hope to see you then, and good luck this week. If this market starts to get out of hand a bit, just be careful. So anyway, enjoy, guys. We'll speak to you again soon. Bye.